Let's start with some eye-opening facts. According to Bankrate's 2025 credit denial survey, nearly half, 48% of Americans who applied for a loan or a financial product in the past year got rejected. Even more surprisingly, about 14% of those faced multiple rejections, and many were never given a clear reason for their denial. It's not just personal loans. The Federal Reserve Bank of New York reports that mortgage rejection rates have hit a decade high in 2024, over 20%, well above pre-pandemic level. For business owners, NBFCs admit that nearly 4 out of every 10 loan application now gets turned down, often with no concrete explanation. But the mystery doesn't stop with loans. Take the financial markets of the past 3 years. Research shows periods where all indicators pointed towards strong markets. Yet, stock prices and trading volumes moved unpredictably and at times irrationally. Reports from 2025 confirm that these abnormal trends defy the logic of traditional finance. Market momentum, small cap outperformance, and unexplained price drifts that left even experts asking, who's pulling the strings here? Have you ever wondered why this happens or experienced it yourself? For me, it got personal when I applied for a routine credit card. My score was solid. My application should have been a slam dunk, but the bank rejected me with no real reason, and that denial sent me down a rabbit hole. Why do these invisible decisions by banks, lenders, and even algorithm have so much power over my financial life? And who is really in control? Before I started this channel, I had so many questions about how money really moves. I kept wondering, how do financial products and companies actually work? And who's profiting in ways we don't see? The first thing that really got me thinking was those buy now, pay later payment plans. Everybody loves the idea of interest-free installments. But how are these companies making money? And who's really footing the bill? Making that video pulled me into a massive rabbit hole about hidden mechanisms lurking within our financial systems. What I now call the financial black box. As I dug deeper, I discovered that a financial black box isn't just about obscure fees or fine print. It's about entire financial decisions being made in secret. These are systems, sometimes powered by complex AI algorithms, where you see the outcome, but the inner logic driving those choices are invisible. The more I dug, the clearer it became. Financial black boxes are everywhere, quietly shaping our lives in ways most people never realize. We are taking this investigation even deeper. In this video, we'll try to see how powerful AI algorithm, these secretive black boxes, are silently making financial decisions that affect your loans, your credit, and even your daily banking, often without any explanation. So let's dive in, because understanding what's hidden is the first step in regaining control. Picture this. You walk into your local bank branch and ask for a loan. The teller takes your paperwork, disappears into a back room, and comes back 20 minutes later with a no. When you ask why, they shrug and say, the system decided. That's basically how modern finance works now, except the back room is a server farm, and that decision happened in milliseconds. But here's where it gets weird. Let's say you get rejected. You march back into that bank and demand to speak to the manager. The manager pulls your files, looks at the computer screen and say, I honestly don't know why it said no. The algorithm flags something, but I can't tell you what. This isn't some dystopian nightmare. It's a Tuesday afternoon at banks across America. Now imagine that same mysterious decision maker isn't just handling your loan, it's also deciding whether your credit limits get cut, which investment option your app shows you, how much you pay for car insurance, and whether that business loan gets approved. Oh, and it's also executing millions of stock trades per second, potentially moving markets in ways that affect your retirement fund. The craziest part? Even the people who built these systems often can't explain exactly how they work. It's like hiring the world's most powerful financial advisor, but they communicate only through cryptic hand gestures and never explain their reasoning. You just have to trust that they know what they're doing. This is what we're dealing with when we talk about AI in finance. It's not the robot butler from science fiction movies. It's more like having an invisible financial puppet masters pulling the strings you can't see, making decisions using logic you can't access, based on data you didn't know was being collected. The technical term is black box. You can see what goes in, you can see what comes out, but the middle part, that's locked away. And right now, that black box is quietly reshaping how money works in ways most of us never agreed to. So, where exactly are these AI black boxes operating in your financial life? Let me show you 4 areas where algorithms are quietly making decisions that could change everything for you. And I've got the receipts to prove it. As I mentioned before, according to Bankrate's 2025 survey, nearly half of all Americans who applied for a financial product got rejected. And here's the kicker, many were never told why. The Consumer Financial Protection Bureau just issued new guidelines this year because so many people were getting denied by what they called black box algorithms that even the banks can't explain. Take the Apple Card controversy. When it launched, tech entrepreneur David Hansen discovered his wife got a credit limit 20 times smaller than his, despite sharing finances, filing joint tax returns, and living in a community property state. Apple's response? It's just the algorithm. Even Apple co-founder Steve Wozniak experienced the same thing. The New York Department of Financial Services had to launch an official investigation because no one, not Apple, not Goldman Sachs, could explain how their AI made decisions. This isn't isolated. A 2025 UC Berkeley study found that AI lending algorithms charge African Americans and Latino borrowers nearly 5 base points higher in interest rates than white borrowers with identical credit profiles. That adds up to $450 million in extra interest paid per year. Here's something that should terrify you. AI now executes over 70% of all US stock trades, and these systems can move faster than any human can react. Research published in 2025 shows algorithmic trading has statistically significant impact on S&P 500 volatility, meaning your retirement account is being pushed around by machines you'll never understand. Do you know about the 2010 flash crash? The Dow dropped 1,000 points in minutes, wiping out trillions of dollars before recovering just as quickly. That was caused by algorithms following each other into a selling frenzy. Well, guess what happened on July 16th this year? A single tweet from a little-known congresswoman claiming Trump would fire Fed Chair Powell sent AI trading systems into override, causing massive market swings in seconds. All from what turned out to be a false rumor. The IMF's 2024 Global Financial Stability Report warns that AI-driven trading is making markets more volatile, not less. Those robo-advisor apps promising to optimize your portfolio, they are black boxes too. A 2025 study found that while AI-driven robo-advisors can improve portfolio performance by 30% using genetic algorithms, they also create what researchers call alienation from the stock market. You have no idea why your money is being moved around. SoFi, one of the major robo-advisors, actually got slapped with the regulatory action in 2021 for selling clients' holdings without proper justification, causing many to realize unexpected taxable gains. The SEC found their algorithms were making trades that benefited the company more than the clients. This one's personal for a lot of people. AI is now setting your insurance premiums in real time based on data you never agreed to share. A 2025 report from the National Association of Insurance Commissions found that 18 states are now investigating AI insurance pricing for potential discrimination. Insurance companies are using everything from your shopping habits to your social media activity to set rates. If you live in a zip code with certain demographic characteristics, if you use an Android phone instead of an iPhone, if you shop online late at night, all of this can affect your premiums and you'd never know about it. The most disturbing part? A 2025 study found that AI insurance algorithms often engage in proxy discrimination. They find data points strongly correlated with protected characteristics like race or gender, then use these as pricing factors while claiming they don't discriminate. In every single one of these cases, when people asked why was I denied or why did my rate go up, the answer was the same. The algorithm decided. No human oversight, no clear explanation, no appeal process, just an invisible system making life changing financial decisions about you without you. Now that we have seen where AI controls your money, let's talk about what happens when these systems fail. And the consequences are often far worse than getting denied a loan. A 2024 study by MIT found that machine learning models used in lending became more discriminatory over time as they learn from biased historical data. The study tracked 2,000 AI lending decisions over 18 months and found that racial disparities in approvals increased by 23% as the algorithms refined themselves. JP Morgan Chase faced a class action lawsuit in 2024 when their AI overdraft prediction system was found to be 40% more likely to flag transactions as risky overdraft for customers in predominantly black neighborhoods. The algorithm had learned to associate zip codes with risk, creating what researchers call digital redlining. Remember when Robinhood's trading algorithms went haywire on March 3rd, 2020, causing a system-wide outage during one of the most volatile trading days in history? Well, that was nothing compared to what happened in 2024. On September 15th, 2024, a software update to Citadel Securities' AI trading system caused what regulators are calling the Great Glitch. For 47 minutes, the system mispriced thousands of stocks, creating artificial arbitrage opportunities that smaller algorithmic traders tried to exploit. The result? A temporary $2.3 billion hole in the market pricing that took 3 days to fully unwind. Retail investors using robo-advisors saw their portfolios swing widely as their app tried to rebalance based on faulty pricing data. Criminals are now using AI to exploit AI. In 2024, the FBI documented over 200 cases of what they call adversarial attacks on financial AI systems. Criminals figured out that they could manipulate their digital footprint to fool lending algorithms. Things like temporarily changing their location data, manipulating app usage patterns, or even using deepfake technology to create false income verification videos. One case involved a crime ring that used AI to generate fake utility bills, pay stubs, and bank statements specifically designed to fool Bank of America's document verification algorithms. They successfully obtained over 50 million in fraudulent loans before getting caught. The scary part? The bank's AI system gave these fake documents higher confidence score than many legitimate documents. Credit bureaus are now collecting your data you never agreed to share. In 2024, Experian faced a $75 million fine from the FTC after it was discovered that they were purchasing location data from mobile apps and using it to predict creditworthiness. If you visited certain types of businesses, payday loan stores, casinos, or even specific medical facilities, it could affect your credit score. TransUnion got caught using AI to analyze social media posts for financial stress indicators. If their algorithms detected language suggesting money troubles in your posts, words like broke, struggle, or even tight budget, it could trigger alerts to lenders who subscribed to their services. Maria Rodriguez, a small business owner in Texas, had her business credit line suddenly cancelled in 2024. Wells Fargo's AI system had flagged her account for suspicious activity because she made several large purchases of equipment in a short period, which is exactly what you'd expect from a growing construction business. But the AI couldn't understand the context. When she tried to appeal, she was told that the decision was final because the algorithm had identified patterns consistent with financial distress. It took 8 months, 3 lawyers, and intervention from Texas Attorney General's office to get her credit restored. By then, she had already lost 2 major contracts and had to lay off employees. Here's where it gets really concerning. While regulators are trying to catch up, the technology is evolving faster than oversight. The EU's AI Act requires explainable AI for high risk financial applications. But companies are already deploying what's called foundational models, AI systems so complex that even their creators can't fully explain how they make decisions. The US Treasury Department's 2025 report warns that current regulatory frameworks are fundamentally inadequate for overseeing AI in finance. Quote, "We are attempting to regulate 21st century technology with 20th century tools." Meanwhile, China announced they are developing a national AI credit scoring system that will incorporate everything from your shopping habits to your social connections. If implemented, it would make our current privacy concerns look quaint. The bottom line, we are not just dealing with biased algorithms, we are facing an entirely new category of systematic risk where AI systems can fail in ways we have never seen before, affecting millions of people simultaneously, with no virtual recourse for those caught in the digital crossfire. So here's what we have uncovered today. Your money is increasingly controlled by unseen algorithms making decisions you can't see, understand, or challenge. AI black boxes are approving your loans, executing your trades, setting your insurance rates, and managing your investments, all while operating in complete secrecy. We have seen how these systems discriminate against minorities, create market instability, and make errors that can destroy people's financial lives with virtually no recourse. And the most disturbing part, this is just the beginning. These AI systems are getting more complex and more powerful every day, while regulation struggles to keep pace. But here's the thing. Knowing this exists is the first step to understanding how your financial life is really being controlled. Most people have no idea that algorithms are making these decisions about them. They think they're dealing with human judgment when they're actually dealing with mathematical formulas trained on biased data. Now I want to hear from you. Have you ever been denied a loan or credit without a clear explanation? Has your credit score changed mysteriously? Have you noticed strange pattern in your investment accounts? Drop your experiences in the comments because your stories help all of us understand how widespread this really is. If this video opened your eyes to something you didn't know before, do me a favor, send it to that friend who's always complaining about getting denied for financial products that they should qualify for. Post it in your group chats. The more people who understand these financial black boxes exist, the harder it becomes for companies to operate them in complete secrecy. This is just one piece of a much bigger puzzle I'm putting together on this channel. Every financial black box video uncovers another layer of how money really works behind the scenes. From buy now, pay later hidden costs to AI control lending, there's so much more coming. Check out the financial black box playlist if you want to see what other secrets I've already exposed. Hit that subscribe button, ring that notification bell because we are building something important here. The financial system wants you to stay in the dark about these AI black boxes. They profit from your ignorance. But you are here, you're learning, and you're sharing that knowledge. That's how we start to regain control, one person at a time, one video at a time. Thanks for watching. I'll see you in the next financial black box investigation.